Welcome to the first of our COVID series podcast by the Asian Banker on a platform we now call Radio Finance. And for all of us around the world who are joining in this session, I'm here in Singapore. I'm working from home. But everywhere else in the world, in the offices that the Asian Banker, the places where Asian Banker has an office, in Kuala Lumpur, there's a full lockdown. All our staff are working from home. In Manila, there's a full lockdown. All our staff are working from home. In Beijing, was a lockdown until recently, and our staff have now gone back to working from the office. And then in Dubai, our staff are also still working from the office, but there are a lot of restrictions in terms of what we can do. So for all the rest of you, I know that many of you in many of the large corporations around the world are getting used to this idea of working from home. So I took the liberty of organizing this first Radio Finance session from my home, where I get to have a view of Singapore's container shipyard movement. And I must say, there's been a lot of movement in terms of regional ship movements lately, which gives me the idea that trade is not necessarily going through a bad phase, except that it's probably redirected and so on. And so there's lots of anecdotal information, insights that we can get from all of the different places that many of us live in. The question that we want to have answered in this first session is really how is China going to work its way over the impact of the coronavirus. And many of us have seen that bell curves, the chart where China is perhaps on the other side of the bell curve, where the rate of transmission has started to decrease dramatically, while the US and several European countries are now on the rise. And of course, there are large countries that we need to worry about, India, Africa, and the Southern Hemisphere, where we do not yet know what the impact of the crisis is going to be like in the next 6 months or so. But for this particular session, let's focus on China. And we have an incredible panel, or incredible guests, I would say, because you're now guests in my house. So, so I shall call you guests rather than panel. And in fact, the whole language by which we organize meetings have to start changing. I'm very happy to have Professor Zhang, the professor responsible for the economics, School of Economics in Fudan University in Shanghai, Lu Ting, who's a China chief economist at Nomura, who is also based in Shanghai, Tang Ning, a very good friend of mine, and the founder of CreditEase, who through this, what we call now credit tech, which is using technology to deploy credit to the economy, has a very strong front view of how credit is being deployed in China. But he also runs a wealth management business, so that's also an interesting dimension to look at. And Shen Jianguang, the chief economist of JD, the organization that is really at the frontier of the consumer economy, the consumption economy in China, and the platforms by which people spend and get their everyday needs met in China today. Now, let me just start by sharing with you some charts that will help to guide our conversation today. The big challenge in the bell curve is to keep the peak as low as possible, so that as many countries as possible will not be affected by, or rather will not have their emergency and medical facilities overwhelmed by the pandemic. Now, for the purposes of our discussion, the first thing I'd like to remind all of us is that 2020 is different from 2003. In 2003, China made up about 10% of the global economy, about 5% of imports and 5% of exports. Today, China exceeds 20%, about 25% of the global economy, and both on the import and export side, very considerable bellwether, as it were, both demand and supply on the global economy. And something to be taken note of is the fact that the growth in global trade has been leveling off in the last few years. And that's why we see, for example, a great deal more protectionist measures in several economies, and technology itself making it possible for a lot of production to take place closer to consumption. And a lot of activity was already taking place in that dimension as the COVID-19 virus started to take hold. Needless to say, manufacturing and business activities in China had fallen off the cliff in February because of shutdowns. What is interesting is that consumption of coal has started to come back on again, and it's almost at 2019 levels, which means it's actually a proxy for production, for the use of energy in manufacturing, especially the northern part of China. So this chart is quite encouraging in that coal consumption is an indication of production. Of all of the countries around the world, Australia seems to be the most affected by China because a lot of its export, it's the country whose export perhaps more dependent on China than most of the other countries. And then comes Korea, New Zealand, and so on. From a global perspective, it's the small countries like Mongolia and Angola, which have a greater percentage of dependence on China than the large countries. And that will put in perspective the fact that larger countries will be able to absorb the dependence on China a lot more than the smaller countries. The People's Bank of China has been lowering financing costs through a lot of different measures, reduction in interest rates, deferment of taxation, personal and corporate tax, as well as incentives for a number of social and infrastructure activities in the economy. And as we follow all of these developments on the market front, it's quite interesting to see that China's stocks continue to sort of outperform. I mean, they're all under the weather, as it were. But I think that because 70% of corporate ownership in China is actually state-owned, so that is able to give a lot of anchor to the capital markets going under much as the rest of the world has seen. But at the same time, the promise of policy stimulus, and they start with a lower valuation anyway. So the downside of the Chinese capital market has not been as adverse as that of other economies. Those preliminary points, let's get right into the conversation. The first person I would like to ask for comments is Professor Zhang. And the top of mind question in everybody's mind is really, do you think we are going to see a V-shaped recovery or a U-shaped recovery, or are we expecting a double hill type of recovery, which is a W recovery, if you will? What would your thoughts be on this? And what are the data that you are looking at in order to construct your own idea of how China will evolve?
Well, I think it's most likely the U-shape, in terms of recovery of Chinese economy after the COVID-19 attack. I almost everybody, check the data, and also, I walk around in my, community. Actually, there's a shopping mall, behind me. For almost every day, I came down there and see, how the normal business has been going on every day. If you look at the shoppers, if you look at the, all the shops, probably around 70 to 80% of all the shops are open. But I think the retail business is still, for less than half, it's been back to the normal. And another way looking at the recovery of the economy is to look at the traffic, especially in the weekdays, and I think on the street you could see, the traffic has almost been, as normal as usual, which I think the reminder of the very quick, recovery of the normal lives. But still there is a pending issues, especially, people still believe that the virus is still there. We have to be more cautious about, everything. And the schools are still closed down today, not being open, to the normal times, So it still take time, for the economy to be fully recovered. I think that right now the very big concern of everybody is the virus coming back through the the people cross the border every day, especially in the big city like Beijing, Shanghai. The airport has been very concerned about the coming back of the overseas Chinese. And that would take a lot of time, I think, from the government. In order to keep everything, is okay, especially after, the virus be controlled, on a national level. So, for the recovery of the economy, I think it's maybe a little more slower, than we expected.
Okay, so Professor Chung, you are reflecting the feel of the ground. There is still cautiousness, even for ordinary people. And schools are still closed, and even in terms of everyday life, we are looking at a kind of a lack of optimism, but cautious hope. But everyday life hasn't quite come back, in full force yet. So so that's what you're reflecting at the moment, right? Now, what about let's ask Tang Ning. As I said at the introduction of this session, Tang Ning, you have a good feel of the demand for credit by small businesses. So what do you see happening on that front? And how's that different today? What has to come back? Where's the desperation? Where are the desperation points and so on in China right now?
Yeah, thank you, Emmanuel. I have a very unique view because CreditEase is vice chairman of China's Small Business Association, and we worked very closely with the association on conducting surveys. Targeting medium-sized and small businesses. And actually what we see is that, small businesses are hit hard, but at the same time, they are very resilient. They are learning to become more digital. Yeah, I think you start to see digitization is becoming really, really huge in China. Before the crisis, people talked about going digital, but much, trial and error, so on, not absolutely necessary, so on. But after the crisis, really going digital is on top of everybody's agenda. Yeah, that's one key thing. Yeah, we see that small businesses, mid-sized businesses, being able to utilize technology to do new business models. For example, we are doing video, right? You know that many Chinese companies, businesses, have become stars. Yeah, online stars, right? They call it like a multi-channel network. I've become a star actually. Yeah, doing this video real-time show. It's very effective because give you one data point, right? Our February and March. Yeah, our productivity has been 400%. Compared with a previous year, so it's huge productivity enhancement because we serve small businesses from credit and also equity investment side. Our fund of funds invest in leading funds, which in turn invest in small businesses doing cutting edge technology. They do very creative businesses through digital ways.
Tang Ning, you're an amazing salesman because you're still selling your funds despite a difficult period in the economy. But what are you telling your customers now, the ones who buy your funds? Are you telling them that now is the time to buy because the market has tanked out, or now is the time to buy because there's value in terms of the assets that you're investing in? what is the message that you're giving your customers right now?
Well, you see, first of all, China is really relative value these days, right? Like China is recovering from the virus situation, doing a better job than other parts of the world. Secondly, technology innovation is really the future of China. It's where future value will come from. So investing in technology innovation is the key thing. And those technology innovation companies are less hit, in the crisis, because they are more digital, less relying on, on the ground, so facilities, so on. And also people need to learn to be long-term. All the short-term speculation activities, don't create much real value, right? So people are becoming more long-term. China's capital markets are getting better and better. You know that they recently pushed through some new policy encouraging venture capital, right? Because they provide, the new rules provide a window of opportunity for venture capital to exit early. In the past, they were not allowed VCs to exit early. Now, if you are part of the company for 5 years, you can just exit entirely your position. That's very encouraging for Chinese VCs. So I think after the crisis, really technology innovation will have a great window of opportunity, like doing remote.
Actually, Ning, you are so involved in many facets of the business, that of the industry and of the economy, that you've actually raised a number of points that that we need to build into the conversation. Maybe let's just get the next person online, Ting Lu from Nomura. When you see some of the incentives that the government is putting in place in China, holding back on collecting taxes, incentives for small businesses, and even the incentives for the markets. Ning has pointed out that the markets have sort of held out, and it makes me think that situation is unique to China, because the state is able to put a stopgap in terms of the market's free fall in that way. What do you see on all of these points, Ting Lu?
Now, first of all, yes, I think the Chinese markets, especially stock markets, have been doing relatively well compared with markets in Europe and in the US. In Europe, at the moment, it's down more than 40%. In the US, down more than 30%. In China, the West is down around 10%. Actually, on the first day of the Chinese New Year holiday. Then it's up, it's down again. Well, I think there are two reasons behind small volatility. The first reason is I think China is just lucky because the worst of China's coronavirus was in the last week of January and the first week of February, when China was in Chinese New Year holiday and the market was closed. So China successfully avoided the worst moment for its stock markets. I have to say that if stock markets were open in the end of June or in the beginning of February, that must be quite ugly. The second reason is the Chinese government's success, relatively success in containing the virus. Well, of course, I think they have greatly flattened the curve. As you can see, at least I think, based on the official statistics, the new cases in China in the past 2 weeks has been somewhere between 30 to 80, and most of these new cases are imported infections. So I think the market has built some confidence in the Chinese government's strategy in containing the virus. But we will have to be cautious for the next few months, I think, for two reasons. Most likely, I think the markets will be volatile, perhaps maybe more volatile than the previous 2 months. The first reason, again, the one reason is, well, there may be a risk of second wave, both because of those imported infections as a result of the global spread of the coronavirus, and also because of China's domestic transmission of the virus, because anyway, I think the percentage of those people test positive but without any symptoms are quite high. So there might be a risk for transmission in China. Even now the new cases are relatively low. The second reason, of course, is China's slumping exports. We expect China's export growth will be a minus 30% for the next 1 or 2 quarters because of the global pandemic. So that's why I think economic fundamentals would be relatively bad, both for the first quarter and the second quarter. In this regard, I do agree with Professor Zhang that it's not a V-shape, it's more like a U-shape recovery.
Can I ask Professor Chang, from the kind of incentives that governments have been, throwing at economic problems up to now, a lot of that has been directed at demand-side economics. Do you think that there were things that should have been done on the supply side to at least keep China going, and keep the supply chains going, or are there going to be issues on the supply side, in the foreseeable future?
Well, I think so what the Chinese government is doing is simply, to help the supply side to recover as soon as possible, because, as many, point out, the biggest suffering, of the virus, on the economy is actually the small businesses. So I think the policy focus must be placed on the recovery of the small business. So fiscal policies as well as the monetary policy at this moment can be in the modest way, in order to keep the small business going and prevent them from from being closing down or bankrupt. So that could making the stunning growth of the employment in China. I think the government has recognized, the importance or, the issue of the employment as a result of this, the epidemic. So for not simply focus on the growth target, because you keep the growing of employment, and that could make everything in order. And once China could, been recovered from the, epidemic, I think they're going to create the demand, for the rest of the world. So, it looks like everybody is hit by the virus. So it is, simply an issue of a supply side. But it, as you mentioned, you're going to turn it into the demand side when everybody's suffering, in the supply side. So you must have somebody. Most likely China to move first. When Chinese economy going to recover first, I think then it created the demand for the rest of the economy, to recover.
Right. So would you have a perspective on that? That China's own domestic spending can sort of kick off a U-shaped recovery globally?
Well, it's a tough question. So as both of you have mentioned before, I think this is both a supply shock and also a demand shock. At this moment, I believe that, perhaps maybe the supply shock is still a major shock for China. Regarding its impact on the Chinese economy, I believe that for the next few months, supply shock is still something of a big concern. The reason for this is that, as some of you mentioned before, that even the Chinese government just really want to push for resumption of business, but they still need to be very cautious because they are also worried about the second wave. I heard that some of those movie theaters, for example, restaurants, they were asked to open a week ago, but in the past few days, they were asked to be closed again. So in this regard, at least at this moment, and maybe for the next 1 or 2 months, I think, from supply side perspective, we are not back to the normal situation yet. And just because of this, financial reliefs are still very important for in China. It's unlikely for China just to use demand stimulus just to reach a decent growth in the next few months. both to boost the Chinese economy and also to boost the global economy. In this regard, I think we can compare China now and China in the beginning of 2009. At that time, there was no virus, but there was a global financial crisis. But China launched massive 4 trillion stimulus. Of course, it's actually bigger than 4 trillion. So in 2009, to some extent, China's big demand stimulus helped to stabilize the global growth. Otherwise, global growth will be much worse. But this time around, I think the Chinese government's capacity to use such a big stimulus to stimulate demand, well, at least I would say it's on much smaller scale, but just because the virus itself still actually have a big impact on the Chinese economy.
Right. I understand that Shen Jianguang is already online. If we can get you online, I just wanted to ask you, Shen, from the perspective of a chief economist of JD, which is really at the frontier of the digital economy on the consumption side in China. What do you see taking place? We've just, if you weren't in the call earlier, we already asked Ning, for example, on his perspective in terms of credit creation for small businesses and so on. But the question that I'd like to ask you is that as the chief economist of JD, what do you see in terms of consumption and the confidence in consumption that drives your business?
Yeah, actually, thank you very much for inviting me. For JD, you know, so I think one thing interesting is through the development in the last decade of e-commerce and as well as the logistics system, delivery system, I think China at this time actually coped with this pandemic. I think much better than most other countries due to this capability to utilizing, you know, e-commerce capability as well as the digital technology. For example, even during the worst period during the pandemic, even in Hubei province, there's over 1,000 delivery men from JD. The JD workers are still working, can deliver all the medical supplies to hospitals and to deliver goods to all the households in Wuhan. So this is quite exceptional. Just think nowadays, I just read news that now in Europe, in America, right, like Amazon, you know, the orders will be delayed for about a week, right? So I think this is last decade, you know, through this development of the logistics system, e-commerce system, China actually can still deliver goods, or like even JD, our company, within 1 day, you know, to all the household that need the suppliers.
Shen, you must tell us, what is it about China that when it comes to execution, even in distressed times like these, is able to you know, execute flawlessly? I mean, this is something which you know, the rest of the world really needs to study a lot more deeper. Now, and you are in a perspective to give us an idea of, you know, why does a JD not have logistics issues, and why does an Amazon have logistics issues? Is it the size of the economy? Is it the last mile, the delivery? Is it the payment system? Give us a sense.
Yeah, I think the first thing is about you know, the investment in the digital technology in delivery system, right? You know, JD has been investing in this transportation system, logistics system for the last decade. It's spent a huge amount of investment, right? So I think that's very important. Also, the government spending a lot of money on infrastructure in telecommunications, right? So you can see in many countries there's news is that you know, the network, there are so many people now working online, but the infrastructure cannot support this surge in the usage of this internet, like a video conference, for example, right? So at the same, you know, JD has developed so many warehouses around China. This is also very, very important. So we have all the warehouses owned by JD, and all the delivery workers actually all belong to JD. It's
how much of that is technology and how much of that is human resources? Would the argument that is in China, labor is a lot cheaper than the West. Would that be an argument?
Yeah, I think, I think it's both. Why I say both? For example, even regarding the technology side, JD has invested in building many warehouses across China. So some warehouses, there is no single workers inside huge warehouses. It's everything automated, right? So this increased efficiency grossly. This is the basis. But then it's enable our company JD to deliver actually to 95% of Chinese villages within 24 hours. So even before the pandemic, this has been achieved. We can deliver to 95% of Chinese counties within 24 hours after they make orders. So
and that's just JD, right? Because you also have Tencent, you've got Alibaba, and you've got all of the others as well.
No, it's very different. We are the very unique model. So Alibaba is a platform model, right? Mostly they don't have their own warehouses. They have the alliance with forwarding companies. But we as integrated, this shows the advantage of this kind of model. So, even before, Amazon don't have this model. They also use UPS to do the final delivery.
Right.
But in JD, we have the only company, I think, this unique model that we buy the goods by ourselves to put in our warehouses and deliver to the households, to companies using our own workers.
So the economic model is different because JD sees itself as a federation of different suppliers with whom it does not have control or ownership, whereas JD actually purchases a good and then sells it off to the final buyer. And also
That's right.
And also you own your distribution. So you own your trucks, you own your logistics, you own your warehouses, and so on.
That's right. That's very unique model. And it used to be, called a too heavy model. Yeah, too heavy. It's the capital heavy, right? So you have to invest all these warehouses. It's very capital intensive, and also it's very labor intensive. So all these workers are official JD workers. We pay all the social benefits.
So were you profitable before the crisis, and are you
yes,
able
we are
to
profitable.
be above cost?
Last year we are it's a hugely profitable. It's our total profits is over 10 billion RMB already. So, but that's actually after many years of losses. This is our CEO, Mr. Richard Liu, said it's actually we invest first. So we build all the infrastructure, then we are now gaining all the benefits of doing this. Because capital market used to question this model, saying you invest too much, right? You have too many workers. But now actually this model start to bear fruits. Is now not only before the pandemic we already been profitable, but also during the pandemic it's a huge advantage of this model that we can deliver even without any interruption.
Now, what new things is the pandemic teaching you at the moment in terms of the demand of customers? Is it more towards consumables? Is it more towards food? Is it more towards away from discretionary spending? What is it teaching you?
So this is actually being advantage of being a chief economist in like company like JD.
You see the actual spend.
Yeah, yes. I also all the data, right? The big data. In addition to all the micro data, I also have the macro data, but I also have the big data. What I can see is very clearly the discretionary, like jewelry's, consumption has been declining, right? So the expensive goods, the luxury goods, people are spending money at home. For example, the kitchenware, kitchen goods, and many people are buying kitchen goods that they are cooking by themselves. That's why foods, fruits, this kind of purchase has been surging rapidly. So it's look like exercises at home. This kind of goods like sportwear has been doing very well. And I think what's a lesson is after this, I believe this digitalization of the whole economy will speed up. I think very clearly the internet, for example, this fintech industry, right? So there is no interruption for the online banking business. right?
Right.
There's no interruption on this online insurance or online wealth management business.
Right.
They're
Now,
doing much better than the offshore.
Now, both for
offline.
yourself and Professor Zhang, I want to ask this question. What do you foresee in terms of unemployment in China? Do you see that, that there will be an attrition at certain levels? Of course, China is about 70% state-owned economy and then 30% private enterprise, and a lot of that is in the south of China. But the private enterprise already faces a lot of attrition on the export side of the economy. But how do you think overall the sense of job security will evolve?
I think
let's get Shen first, and then Professor Zhang. Yeah.
I think the first thing is, it's a globalization. I think now what I learned is the Chinese exporting company, they are facing this cancellation of orders because, what you see the situation in Europe and America, right? So the global demand has been declining for sure. So that's why, exporting companies are facing, difficulties. I think that's, so far we see cancellation, but if this is a prolonged issue, then it will result into this job problems. Then a domestic service company.
What do you worry about being JD, being a platform or a consumer-oriented organization or a platform?
So definitely the income is very important, right? People have income and they consume. If their income declines, of course, the purchase will decline, even though we are doing much better than the shops, offline, right? So, but of course, so that's actually the issue that I think the government need to step in to issue a consumption voucher, right? Consumer.
So right now you're not experiencing that, but how long more do you think you will need to hang on?
It's probably I did a study. I looked at 10,000 Chinese listed companies. I found that 8,000 small medium-sized companies, they can actually survive at around 3 months without any business, right? So actually 60-70% of the companies, they cannot survive beyond without any help, without any business for 3 months. But that's why the government has stepped in to help those companies. I think that's giving consumption voucher and give subsidy and also exempt them from some fees. I think that's very important. The government rescue package is the key to prevent unemployment.
Right. Let's ask Professor Zhang his comments on that, on unemployment, on survivability of business and demand.
Well, I think China going to face in the big I would say big plunges of the employment, so the unemployment rate must be on rise. This is the foreseeable case. I think the government recognized that. I tell you the intermediate. I tell you the immediate response of the government policy right now is about the expansion of about 10-20% of enrollments of the graduate studies at the colleges, universities, because we're going to have over 8 million college graduates this summer.
Put more people in school. Yes.
Yeah. So we have to enroll more students back to the university for the graduate studies. That's part of the policy response from the government, to the rising unemployment on a national level. I think that China is always facing these problems in a different period of time. But the point here is, you have to find out you have to make sure that the costs for people giving up another job and taking a new job is easier. So you have to pave the way for the people getting easily moving from one place to another. So when a lot of small businesses close down, I think the people would find a new job in the tertiary sector. So I think the policy should be placed somewhere where they can guarantee such move over is much easier. So there is a package of policies I think probably going to penned over by the government at this moment is you know, they could create an incentive policy, for instance, for the business owner. You know, if you keep more employment, you know, so you probably get it subsidized a little bit.
Yes.
You know, in order to, you know, maintain the overall the employment level in China after the pandemic, you know, could be modest.
Okay. So there are already policies in place, not just to kickstart consumption, but also to reabsorb the workforce into different parts of the economy, even sending them back to school. That's very, very good. And I'm very happy to hear that. Ning, you know, I asked you initially to talk about small businesses, but you also run a very successful wealth management business. So let me ask you this question. What are rich people worrying about in China now?
Well, actually, a couple of fronts. Okay, one is about risk management. Yeah, so people have a different idea or better idea about risk management. Yeah, it's a very complex situation right now for people who have done very good asset allocation, who have done very good, like, you know, separating personal wealth from enterprise. They are doing very well. They can sleep well at night. But for those who haven't, right, who had like a single direction, like a bet on stock market, real estate market, or any one single asset class, or who didn't do this separation of personal wealth, family wealth from enterprise, right? Like their companies may run into debt or so on, bankruptcy, so on. They are really in trouble. So I think going forward, people have a better understanding of asset allocation, like global asset allocation, like you know, family, trust, separating the wealth from enterprise, buying insurance, so on. So people have a different mindset. That is one. Second, I think you know, some very smart people, experienced investors start to take positions. Yeah, but many we've observed, you know, feel kind of like a panic. They say, hey, this is uncertain time. Shall we invest? Probably not. But actually, you know, if you follow Warren Buffett, right? If you have money, if you don't, that's a different story, right? If you have money, if you can manage your cash flow, you should actually invest now, as opposed to investing in like a market hype. Right, like during market downturn, investment returns are always much more attractive because enterprises value is more valuable. You know, entrepreneurs, doing fundraising.
But you're not telling your customers. You're not telling your customers to go back into the market now, are you? I mean, it's not the free fall.
We are, but we also tell them they should do asset allocation. They should be long term. Right? Not short-term speculation, not just like a direction trade, right? Like a one-way street going into stock market or going into some other like a housing market, for example. No, it's got to be balanced. It's got to be long-term. It's got to be value-oriented, like technology innovation. We talk about that, right? Like people shouldn't invest back into the old economy, right? Which is suffering most. Yeah, I think following these principles, people should come into the market big time. First of all, assuming they have money.
Some of these are very, very practical things that would be relevant in a country where new wealth is very strong. But what about investing abroad? Like you know, your investors who are looking at outside China, what are they thinking?
Well, I think they are really going global, but more like much more than just investing in dollar assets or so on, right? Like these days, you must have heard about like stories like their kids having trouble coming back to China, right? Like from UK, from the US, so on, or paying huge like airfare for like a ticket, so on. So that is also globalization, right? Like family planning, education, so on. And also many entrepreneurs have like importing, exporting businesses. They are actually repositioning their companies, right? Their companies are becoming more domestic demand oriented. I think, as you said, I totally agree. There will be a lot of like supply chain kind of shift considerations, so on. So after the crisis, like it's going to be a new world. It's going to be a new market environment. So for Chinese enterprises, entrepreneurs, they have to reposition themselves for this new world. They need to become more domestic oriented, more digital, more agile.
Right. Lu Ting, can you take Tang Ning's comments and restate them from an economist point of view, especially from an investment banking point of view? What is your sense of companies of good value that that an investor can buy into in China, M&A activities, and also private equity in terms of companies that can be rehabilitated through this process? What do you see in the corporate scene in China right now?
Well, that's a very tough question. Of course, it's also a very important one, also very practical. Now, first of all, yeah, we may not be at the bottom of the market yet. The volatility for the next couple of months could be quite high. So for people with a very short horizon of investment, this is not a good time just to put your money into it. But if for those people with a long-term perspective, I think this is a good time to spot, to identify good opportunities. I can give you one example. Just about a week ago, in Hong Kong, in China's dollar bond market, so for these Chinese companies which issue dollar bonds, in Hong Kong and in Singapore, this is a very big market. Now it's $900 billion US. And
right.
actually, in the middle of this month, the price for a couple of days down somewhere around like 20 to 30% in just a couple of days. And actually, this is a golden opportunity for people to buy if they have enough cash, and if they have cash which they can hold which they can use for long-term investment. Actually, just in the past week, some of these bonds price has been up like 30 to 50%. Yeah. So this is a very good opportunity to spot these kind of rare opportunities when the market is in disruptions. And of course, this is just one example. We have other examples. Some of those Chinese companies, which I believe have long-term value, but could be hit because of the virus. Some of the companies are, based in Hubei province, based in Wuhan, for example. I believe that it's just a short-term problem. I don't think the virus will hit Wuhan forever. But what stock price of those companies have been significantly hit over the past 2 months, and I believe this is also a good opportunity. Anyway, I think this is a good time just to find opportunities.
Oh, excellent. Now, in terms of the renminbi dollar rates, are there currency risks that you see that we need to be concerned about? Because it's one thing to buy dollar bonds, it's another thing to be sitting on dollars.
Well, at least I don't worry so much about dollars. Now, of course, dollar now is very strong, very expensive, but I don't think there is a big downside for US dollars, because anyway, I don't think there will be any other currencies which could replace US dollar as global reserve. Actually, you just drew out a point of a conversation that we probably have to have separately on that, which is, is the dollar still the the currency for refuge at a time like this, and that's a whole conversation on its own. It's amazing. Thank you very much for that. But how do you think Chinese companies that have accessed the dollar market or foreign, have issued bonds outside of China, how are they coping right now? Because, in terms of meeting their bond obligations and so on. Well, I do believe there will be some risks, but I think market should not exaggerate those risks. The risks is that for the next few months, most likely, as I mentioned before, China's export growth will be down quite a lot. My estimate will be down 30%. But in the meantime, China's import growth will also be down, and this year may not be a better year for China's balance payments. Why? Well, because global oil price has been down so much, and China is the largest oil importer in the world. Based on my estimate, if oil price on average down 50% from last year's level, China will save $100 billion. So this year, if China's current account or balance payments is in relatively good shape, I don't think there will be repayment crisis for China's dollar bond markets. But on the other hand, I think the Chinese government has been much more cautious than before, and actually a lot of these new regulations to limit the supply of these new bonds. Why? Because I think the Chinese government don't really want to see a massive defaults of those dollar bonds.
Gentlemen, you've given me an amazing perspective of what's happening on the ground in China. We all know that the state is putting in place incentives and countermeasures to hold the economy together. And it's very good to hear from Professor Zhang that the state is putting in place measures to absorb the negative impacts such as unemployment and so on, and also investing in infrastructure such as education and so on. I think that Ning gave us two perspectives, one on what the small businesses are doing in terms of their credit risk, as well as what wealthy people are thinking, or the way in which they think about, or maybe the way in which Ning has been influencing them to think about diversification of risk and so on. But even in that, he's given us a perspective in terms of how his clients have been trying to work their way through the process. Shen, thank you very much for the perspective on JD. And yes, as an economist with a frontline view of consumer spending, you actually see all those numbers, and there's been a focus on consumables, on food, less focus on, and this is predictable in that sense, less focus on discretionary spending at the moment. I asked you this question, how do you think it's going to play out in the next few months? You have a rule of thumb, which is 3 months spending, and both on the corporate and on the individual side. So gentlemen, all of you, and Lu Ting ended it off for us in terms of the corporate dimension, in terms of funding, as well as capital and maybe M&A opportunities. And you're saying, Lu Ting, that it is still early days in terms of the downside risks still to play. And I hope that we will be able to build on this conversation. It's probably a conversation that we probably have to have 3 months down the road, when the US economy starts to show its full shape in terms of the impact of the pandemic on its domestic economy. And then there's a dimension there in terms of China's largest export partner, and the demand side becomes clearer as a result. So this is a continuing conversation. I will be holding other chats with other people in the industry as we go along in the next few weeks. Please join me in thanking our current panelists, and please look out for radio finance sessions in the next few weeks. And please do give us your feedback in the comment section, whether it's on YouTube or on the various platforms on which we are presenting these sessions. Thank you very much, everybody.
Thank you.
Thank you. Thank you.
Thank you.
I hope to see you in Beijing
I hope
next
to see
time.
you soon, Professor Zhang. Yes.